My name is Nixon. I'll be your host for tonight. Welcome to tonight's Market Talk webinar. Some of you may be have attended this series of webinar before. Some of you may be totally new to this webinar. So allow me just to introduce to you what this webinar is all about. So this webinar is part of the Learn from the Pros series of webinar, which we have specially brought to you. We have worked with and collaborated with different market experts to get them to share their market outlook and also the way they invest and trade the market in this series of webinar. And some of you may already know that we have 3 speakers lined up for this series of Learn from a Pros webinar. We have none other than Wong Kong Hao, who will be sharing with us tonight in Market Talk. We will have Ho Seng Fu, who will come back to share with us about his super stock trading strategies, and that will be sometime in Q1 of next year. And we have Mr. Chua Wei Ren, who is a chartered market technician with CGSI, and he shares with us about his market outlook using technical analysis. Just some quick disclaimer before we proceed. So do bear in mind that whatever we share tonight is for educational purposes only. In no way should you interpret tonight's information as the all truth, and all information is subject to due diligence. We are not doing any trade recommendation or indication of investment. So if you want to partake in any investment or trade, do your own due diligence or check with your licensed financial broker. So a quick admin here, we'll be taking questions for today's session during the Q&A segment towards the end of the webinar. Do feel free to key in any questions you have in the Q&A box on Zoom. You can key in the questions at any point in time. We will come to them during the Q&A segment. And try to avoid keying your question in the chat box because it can be a bit confusing when there's too many questions flying around, and then the question will get lost in the chat box. So do your best to key in all questions in the Q&A box. And if you want to ask questions directly, as in speak out and ask verbally, you're more than welcome to. Just click on the raise hand icon and I can unmute you to speak. So with that out of the way, let's come to tonight's session. So tonight we are having Kong Hao back to share with us another Market Talk session. And tonight's theme will be from AI Euphoria to Market Reality, Singapore Investment Landscape. So we all know that the AI trend has been a big bull run this year. And also in the current month, actually, there was a pretty hard sell down. And so we are all at the situation now where we would like to learn and also understand how Kong Hao sees the market and what and how do we position our portfolio going forward from here. So just a short introduction to Kong Hao. He has been in the financial market since 1995, started as a floor trader with CIMAX, and then has been working with a multitude of clients on the investment and trading in his later careers. And also he passionately shares his investment knowledge and outlook with professionals as well as retail investors like all of us. So, and you would like to know that he has also recently this year been awarded a Trading View Wizard. From what I know, there are only 4 awards globally. So he's one of them. So he's definitely doing Singapore proud. Yeah. So with that, I'd like to pass the stage to Kong Hao. Kong Hao, please go ahead.
Okay, I think first of all, I want to thank you, Nixon and Wei Jie, for inviting me once again to share with CGSI. And I'm so excited to share for tonight's topic because I think we all have a very volatile July and August. So you've been wondering where the market will be heading. So I just, before market close, I just do a matching order and just acquire some more Singapore shares, which we're going to talk about it. Why? And so tonight the topic will be we're going to share about the AI euphoria, how to understand this. Is AI still in or is it out? We're going to talk about it very shortly. And there's something interesting phenomenal, which is the Japanese market is very important because within a short month, July and August, the Japanese Nikkei 225 have dropped 27%. And that's alarming. Why? I say alarming because Japanese market in terms of GDP is the third largest in the world. And the first being US, second China. And I have an interest to study into price behavior, into macro environment, because when something moves, it may affect something else later, where it could be opportunity, it could be risk management. So this is how I analyze the market, taking opportunity every time. So we're going to discuss about that, why the Japanese market is so important. And of course, I'm not just going to explain to you why, but as an individual investor, how I'm going to monitor that moving forward after tonight. Yeah, so after 1st of August, it's important that every investor also have to take a look at the Japanese market. So again, why? Because they are the third largest GDP in the world. And then, of course, I'm going to spend half the time about the Singapore investment strategy and how I position myself and what you should be looking at. Should we be looking at the tech stocks or should we be looking at the financial stock in the Singapore market or something else? Then, of course, we're going to follow by a time of Q&A. And I think we should wrap up the session, should be no later than 8:45, I believe. So that's something about myself. And I have a deep interest in understand about macro environment. And because it's so interesting that when we understand about macro environment, like what I just mentioned, that the 31st July and the 1st of August, there's a deep sell down in the Japanese market. Being a third largest GDP in the world, we have to understand that could it be a first crack that it is sending some signal to the market? Because when that happened, the global stock market shaken. Yeah, so we have to understand the impact of it. But of course, with all this development, where is the opportunity? The bottom line is, where is the opportunity? And what I did was I just enjoy sharing all this on a weekly basis, whatever platform is available in the TradingView platform. And this year, like what Nixon say, that I surprisingly I got this award as a TradingView Market Wizard of 2024. According to my friend in the West, it's a very prestigious award. I don't even know that. And then later on, I realized that I'm the first in Singapore to have that, and maybe third or fourth in Asia. The other market wizard was in Turkey, and the other market wizard was in Korea. So this is what we're going to share about why the Japanese Nikkei 225 drop is so important. Yeah, why the BOJ decision is going to impact the rest of the market, the global market. So what I'm going to present to you is based on my opinion, based on my research. It is definitely not a recommendation. So after this, if you find that you want to get into the Singapore stock market tomorrow, is it tomorrow? Yeah, today feels like Friday. I do not know why. Maybe all my children came back home earlier. Tomorrow is a school holiday from there for all of them. So please consult your financial broker if you find that I've shaped your thoughts in how you're going to invest and trade the market. So now let's get into the first topic here. Is AI stocks still in euphoria stage or is it still value? And my answer is to you is that it's still in value. But of course, I'm not suggesting that you're going to buy now because I believe that along the timeline, there will be correction. Why? Okay, let's understand about this chart here. NASDAQ in the year 2000. So some of them say that the AI stocks is something like what happened to the dot-com boom. But I have to clarify this is that it's very different from the dot-com boom with this AI rally today. Why? Because then the dot-com boom in the year 2000, it was built on nothing. It was built on ideas that that was in the year 2000 and before that, they perceived that an idea that there will be some internet shopping that's going to happen after the millennia, that they are visualizing that they hope that there'll be mass consumer buying and making shopping through internet on their computer, on their desktop. So I would say that back then the dot-com boom is more like a scam because a lot of them just started a company with .com and the stock market just flew. Then of course it crashed. And then the story was that the market wasn't ready because the infrastructure, the framework for internet shopping wasn't ready yet until about 2010. That's where the smartphone proliferation that started to take place. Then the internet shopping became very feasible. And then from there, it picked up. Of course, the story is Alibaba got listed and PayPal also tie up with Alibaba, all this and that. So it became very apparent that internet shopping can take place. So you could see literally that it go boom, it go bust, but much later it started to pick up. But today, the ChatGPT, I would say that the framework, the infrastructure is already there. It's a real business. These big companies are making real business, their innovation, all this and that. So I think it's very different from what we experienced at the dot-com. But the headwind for AI stocks is this. And of course, are they overvalued? Yes, some of them. The headwind are full things that I'm seeing here. It could be possible recession that's coming. And whenever there's recession, it means that order will be reduced. So that may happen. And there are some clues that is happening right now. For example, the cut of interest rate. There are studies shows that whenever the Fed cut the interest rate, shortly later also followed by recession. And we look at the US jobless number now at the highest was about 4.3, and it seems like it's still climbing. And so there's another sign of inflation. The yield curve is still inverted. The US yield curve, the 2 and 10 years yield still inverted. So there's another sign of recession. Now, the other thing that what could reduce the order for all this AI chip, it could be another thing is that the ongoing trade war. Yeah, that's the two major hurdle that I'm seeing. So it may be breaking new high in time to come, but just got to be very careful. Now let's look at the numbers of all these AI related companies. Now, as I have put up here, that we could see the NVIDIA, the current P ratio is 72, Broadcom is almost 70, AMD is about 182, and ARM's holding is 324. So are they overvalued in this aspect? The answer is yes, but not exuberant. Why I say so? Because I have to benchmark. If the stocks is being hyped up, being played up, that kind of stocks, recent years that we've been witness, just a very simple study, the PE ratio. Of course, there's more to it. The reason benchmark, it will be Tesla. Yeah, 2 years ago or 2.5 years, or maybe by now 3 years. At its highest point, Tesla was at 1,000 PE ratio. Yeah, so we have to understand that is a bit overvalued, or I would say it's overvalued, but moving forward with the possible recession and also with a continuous trade war, I'm a bit concerned. So my proposition for all these AI stocks in US is that if you're going to trade them, that's fine. Trading, it means that you get in and you plan to get out. Means that it doesn't perform, you are willing to cut. But if you're going to invest them, then you've got to be very careful because don't be too heavy. The strategy is that since you know that numbers is a bit no longer value stocks, there's potential trends going to come. So if you're going to invest, if you have 100, for example, you like this particular stock, please don't put in 70 or 80 if you have 100. Maybe you just put 5 or 10 if you could invest in them. If you have no intention to exit if the market turn the otherwise. Yeah. So this is something that I hope that is valuable to you. Now let's move on to the hot topic tonight. We're going to explain about the Japanese market and where it will lead to, I believe, an opportunity in the Singapore market. If you can see, we're going to discuss later on the SGX stocks. Yeah, Singapore Exchange stock itself, not just the exchange. the recent days, it has been performing quite well. So you got to ask yourself, what is the reason behind it? Okay, now let's focus back to the Japanese market. So again, the Japanese market is the third largest economy in the world. Okay, now, so what happened here is that let's benchmark the Japanese economy with their stock market Nikkei 225. And that was 31st of July when they announced that they increased the interest rate from 0% to 0.25%. And the BOJ signaled a very hawkish signal that they are going to continue to hike the interest rate. That's what they say. And then within 4 business day or trading day, you could see that how the market have slumped 20%. And that's very serious. You're talking about third largest economy of the world. Within 4 days, it's slumped. So that's bad. Yeah. And then if I'm going to look at the highest peak for the Japanese market, that is when they make a decision on 31st of July. And from this peak to the very bottom is total down 27%. And so again, I got to point back to my expertise here is that I always find opportunity through macro analysis. That means whatever price behavior, it could be palm oil, it could be gold, it could be interest rate, it could be geopolitical event, it could be Nikkei 225. When it start to move in this kind of magnitude, it also bring opportunity somewhere else. Yeah, and we have to risk manage it. But let's look at when BOJ make this decision of being hawkish, that they say that they will continue to hike interest rate when necessary. Yeah, so it send the market down and it affect many other stock market, including Singapore. Now let's study how it affected the NASDAQ. So from the peak of NASDAQ, this was the decision made by the BOJ. So overall, the NASDAQ, the tech stock, have dropped 16%. And for Singapore market, it has dropped 9%. It's not that bad, but it's no good at all. Yeah, so it dropped 9%. So you can see that how the Japanese decision affect the rest of the market. So in a short while, I'm going to explain to you the reason behind it. Yeah, so their BOJ view, being hawkish, it means that they're going to continue the high interest rate, and being dovish is going to affect the rest of the world, the stock market. I'm going to explain to you why. Now, let's look at what happened here is that when they were hawkish on 31st of July, and they saw, I'm referring to the BOJ themselves, that how the market has, their own market have plunged and also affect the rest of the world. And they are watching it. So about 7 days later, as you could see that this news was being published on the 7th of August, another governor come in and say that it would not raise interest rate at times of market turmoil. Yeah, so they're quite scared. So they changed the policy from hawkish to being dovish. So that was the statement being made on the 6th or 7th. Then after that, you can see that the market rebounded for the Japanese market. So the rest of the world. Yeah, so their decision play and shape the market behavior. So going forward, I would advise you don't just look at what's happening to the US, but also look at what happened to the dollar yen and also the Japanese inflation as well, because that will may shape the view of BOJ again to hawkish. So if they're hawkish, it means that they're going to hike interest rate, and there's a reason why behind it, which I'm also going to explain to you very shortly. If they're hawkish, it means they're going to hike interest rate, and you could see that how it has impact the rest of the world. But why? When they hike interest rate, why will that impact the rest of the world, which I'm going to explain to you right now. Now, so why is the Bank of Japan's decision making such a global impact? The answer is because of this yen carry trade. Now, what is yen carry trade? Is this opportunity that available to investor, including yourself? You could do that even now if you want. You can do that. Is that in the year 2016? So this is the Japanese interest rate that we could see. This line was 0%. Yeah. So in the year 2016, the BOJ have continued to cut their interest rate to even minus 0.1. So technically, it means that if you save money in the Japanese bank, you will have to pay the bank interest rate. So it also means that if you borrow money in Japanese yen, technically you don't have to pay interest rate or pay very minimal interest rate. Yeah, so what happened to a lot of investors that think out of the box back then is that, wow, since that borrow money, let's say technically I don't have to pay interest rate. I borrow money in Japanese yen, I don't have to pay interest rate. So what I do, say for myself, I borrow money in Japanese yen where I don't have to pay interest rate. Then I go and buy, say, for example, US dollars. And if I buy US dollars, then it still pay me about 2/3% interest. So I buy, then I sell the yen. I borrow the yen, I sell the yen, and I buy US dollars and put in a fixed D, for example. If I'm a very conservative investor, I put in a fixed D. Then guess what? It's a free money whereby I can earn interest on my fixed D US dollars. And for the more adventurous one, they will use this US dollars to buy into the stock market. Now, notice the date of 2016. I'm going to show you that the impact of this decision by the BOJ to move down the interest rate from par or 0% to minus 0.1, it creates so much opportunity for many investors. They borrow money in yen and then they buy into the US dollars, means they sell yen and buy into US dollars, and US dollars became strengthened. But more importantly, a lot of investors use this US dollars to buy into assets. Now, notice the year 2016 here is that this is NASDAQ. And look at what happened to year 2016. Then from here, can you see that there was an exuberant growth, okay? Until the 31st of July, when BOJ said that we are going to be hawkish. That means that the Japanese interest rate have risen now to about 0.25%, no longer minus 0.1. But if you can still find that there's a pocket to do that of yen carry trade, you still can do that. But it's no longer that juicy anymore. So you have to see the point that if BOJ maintain to be hawkish, it means that they're going to continue to hike interest rate. It means that this opportunity is no longer exists. So it became very difficult for the investor to borrow money to buy assets in US, and then the US stock market may have some challenges, provided in this aspects that BOJ are hawkish. Now, let me just bring you back to the dollar yen. Now, why is the Bank of Japan have to do that? Because we have to understand that every government and central bank, their role is to protect the people on the street, making sure that the inflation is in good control, and they hope that it can play a role to revive the economy. I don't think I should use the word that they hope. Their role, honestly, is to build the economy and people have jobs to do. Inflation is not that high. But I'm going to share with you that you look at the dollar yen itself, and dollar yen itself, since about 2012, it was 76 when exchanged in US dollars. But between this 2012 to recent high, which is this year, it was 162. So technically, the Japanese yen has depreciated by 1/4. Can you see that? Just between this about 12 years period, the yen has depreciated by 1/4, weakened a lot. But if I'm going to reference to the COVID itself, which is the year 2020 to recent high, the Japanese yen against the US dollars have depreciated by 60%. And that's a lot. In a perspective whereby if I talk about dollar Sing, of course, today dollar Sing is at 130. And if I'm going to say that between dollar and Sing, if let's say Sing depreciated towards the US dollars by 60%, it means that from 130, it is today about over $2. Yeah, within 4 years. Then how would that affect us? It will affect us greatly because we are takers, we are price takers, we import a lot of things from US, from China. So if our currency weakened by 60%, our cost of living will increase by definitely beyond 60%. So this has been affecting the people in Japan. The man on the street, when the Japanese yen depreciated within 4 years, depreciated by 60%, just a benchmark on the dollar yen. Of course, most of the people outside Japan are very happy because we will make plans to travel to Japan. And the Japan tourist has been overcrowded. And you may have heard about story about the Mount Fuji block the entrance view, where as far as I can see, to block the view of Mount Fuji because it's polluting their place, and the neighborhood don't like it because a lot of tourists take advantage of this cheap yen and fly over. But you have to understand, for the Japanese perspective, when the yen depreciate like this, life became tougher because things will become more expensive. They wanted inflation, wanted growth, but not at this kind of rate. So when that happened, the BOJ have to do something. They have to protect the hardship of their people. Yeah, so it's necessary that they have to be hawkish to hike the interest rate, because when there's inflation, one of the key different country, the central bank will deploy different methods, but BOJ is using interest rate as well, as you could see. Now, this is a very important chart here to understand about the Japanese interest rate. Now, we know that Japanese, for the longest time, maybe about 17 years, they have deflation. Deflation means that there's no inflation, but yet there's also no growth. No raise in their paycheck at all. Yeah. Now, but what happened here is that this is the black line is 0% on their inflation. That all this while has been staying below zero. That their inflation is like deflation. You heard about this, right? So, but they hope to have inflation. So finally it came. You look at this yellow line, it reached about 2%. Now, the magic number for most of the central banks around the world, their inflation, they hope to have an annualized inflation of 2%. But what they didn't expect is that it reached a high. Now, you have to understand that within a 1.5 year period, from 2022 or 2021 to 2023, from -0, it went up to 2 and it break 2 and it go up to 4.3%. They hope that there's inflation, but not at this rate. And I believe that BOJ also recognized that if the Japanese yen continue to depreciate, I think this number will continue to rise. So they have to protect their own currency by hiking interest rate is one of the measure. But although the inflation for the Japanese market, it came down to about 2, ideally is there, but it kind of also set a uptrend trajectory, as you could see. So they have to play their cards very well. If they do not hike interest rate or other monetary policy, the inflation may continue to rise. So therefore, on the 31st of July, they make a very strong stand for the first time in 17 years. Yeah. So the first time they hiked interest rate was in March this year. You still remember in 2016, it was -0.1%. But in March, that was the first time they calibrate the interest rate for 17 years later to par. Yeah, to par. Par means 0%. But in July 31st, just about 30 days ago, it increased by 25 basis points. So for the first time in Japanese history for decades, or about 2 decades by now, the interest rate is at plus 0.25%. Yeah. So now it became that the good times to profit from this yen carry trade may be over. Yeah, if the BOJ continue to be hawkish. So therefore, I started by saying that the Japanese market, it is important as well, because again, for those that just joined us, that it is the 3rd largest economy in the world. And the action by the BOJ in 31st July has caused the market from its peak somewhere a few months ago, it dropped 27%. And that's alarming. And it caused the whole world to also drop as well. So now, moving forward, you have to watch out very closely the BOJ action. If they're going to switch back to the tune of being hawkish again, it means that they're going to continue to hike interest rate as much as they can, because their role, honestly, is to protect the people in the Japanese. Their role is to protect the Japanese people. Now, so they are being dovish. I mentioned that. So moving forward, the 2 things that you have to watch is not just the US market alone, but also watch the Japanese market as well, the BOJ action, because how will that affect their view? The BOJ being hawkish or dovish depends, I believe, on 2 things: the strength of the yen. Look out for the dollar yen or the yen itself, and also look out for the Japanese inflation numbers. Now it's at 1.9, about there, but it start to pick up again. Say that inflation start to pick up to 2.5, 3, and the Japanese yen continue to weaken. then I would expect that the BOJ will continue to revert back to the hawkish view. It means that they may continue the high interest rate. Of course, at this point in time, I would not like to speculate because that's not our role as investor or traders. We don't speculate, but we observe what is happening to the market, and we have to think ahead of what the BOJ action are going to do. Why? Because if the yen weaken, it means that inflation will pick up for the Japanese market. If the inflation for the Japanese market pick up, then the BOJ will hike interest rate again. So when they hike interest rate again, it caused the opportunity for these yen carry trade to reduce much, and then you expect the US market to start coming down. But the next question is, then how about Singapore market, which I think that's the topic for tonight. Okay, I'm going to end there in the Singapore market, where I just mentioned that today during the post-closing, I just accumulated some more Singapore stocks, which I think the time is quite near, and I do not know that my next sharing in November with CGSI is going to happen. But if it doesn't happen, it's okay. I make my plan. I hope that next year it may happen for Singapore market. Now, before I jump into the Singapore market, let me just share with you. This is a US inflation. Some misconception about inflation numbers coming down. When inflation coming down, it doesn't mean that things will become cheaper. Yeah. So this is an annualized inflation number for US. Okay, that means I take the average of the whole year in 2023, the US inflation, it was 4.1. And the whole year of inflation number, what we heard from the news is always month by month inflation number. But if I take all the monthly inflation number divided by 12, 2022, the US inflation was 8%. In 2021, it was 4.7%. Now, I'm just going to give this example. In US, let's say in a casual family restaurant, a plate of pasta, say, for example, is going to cost $10 in 2020. So we can see that in year 2021, the whole year up by 4.7%. It means that from 10, it became 10.50, then became 11.30, became 11.70. That's in year 2022 or 2023. But this year, let's say I settle it in year 2024, I think that the inflation up to today maybe average about 3.2%. I do not know August, September, October, November, December inflation, how it's going to perform, because our job, you have to remember as an investor, our job is not to predict, but our job is to use all this element, piece them together and do some projection. Yeah, have a lot of contingency plan here. So I would reckon that whatever the inflation move, even moved down by 2 to 2.5 in August number, but averagely is still about 3%. Now, let's say based on 2024, the inflation for US is set at 3%, annualized 3%. So your workout to this pasta is compounding, right? As you could see, in 2024, the plate of pasta at the end of the year will cost me $12. Now, if you look at the whole 4 years from 2020 to 2024, this plate of pasta have increased by 20%. And that's the fact that most of the Americans are saying that, yeah, inflation is coming down, but why my living expenses is still so high? Unless they're asking for deflation, which is even worse. But this is how inflation is. When inflation comes down, it doesn't mean that the cost of living is going to come down. It just means that the rate of increase is slowing down. So I hope that you can see this perspective. Yeah. Now, let's go over the Singapore landscape because I'm mindful about time. With the Q&A, we hope to end the session before 8:45. And Singapore investment, where I'm always very excited about it, because I always feel that it's not because I'm a Singaporean, but how I invest in an uncertain period. I always find that Singapore is a safe haven. It's not just today, since about COVID started, and that's what I began to derive, that Singapore is a safe haven. Yeah, so 4 years has passed. Has it performed? My answer is yes. Exuberant? No. Is it going to come in a greater magnitude? And I think my answer is maybe. Why? Okay, I'm going to share with you my personal opinion. Now, this is taken from, I think it's not just this guy, but not just from Morgan Stanley, but a lot of investors around the world view that Singapore is a safe haven, including myself. Yeah. So you can see the headline that Singapore is a safe haven in a difficult global environment. That's what Morgan Stanley feel. And it means that the more difficult the environment is, I think that Singapore market will be pretty supported. Yeah. So now let's look at what happened to the year 2022. Now, year 2022 is a very important year because it kind of gives me how I derived that this is true. It's not just a statement, but literally I need to see fund flow, not just in our businesses, because where as an investor, we're also trading into the stocks. It must also happen to the stock market as well. So this is a report by, as I captured here, by Lloyds Bank. It says that the foreign direct investment inflow to Singapore reached a record high of 141 billion in the year 2022. Now, and this making the country third largest FDI recipients worldwide after US and China. Now, you have to understand that in terms of GDP, our position may be ranked between about 30 to 40. Maybe I think we're at about 37. So that's our GDP, our size is that small. But yet, in terms of the foreign direct investment pouring into this country in the year 2022, what happened to the year 2022 later? I'll share a few. That we just ranked behind the first and second largest economy of the world. We rank behind them. We are the third. This is amazing, isn't it? Yeah. So something we have done right. So in a time of uncertainty, money just pour into our market. So it kind of created a support. Then you say, no, Conhao, that's not my experience. But then we're going to look at the STI in a short while. Okay, now let's look at what happened to the year 2022. 2022, the NASDAQ went to the bear market. Now, what happened to 2022? You still remember that in the year 2022, that was when the US inflation hit a high of 9%. That was in the June CPI number 2022. It hit a high of 9%. So at the beginning of year or the end of 2021, the Fed Chairman Jerome Powell still mentioned that the inflation could be a transitory because of the post-COVID, the economy open up, people go up the street to buy up things. It could be a transitory, but it proved that it is not. So during the Jackson Hole meeting, he kind of admitted that it was his mistake. But anyway, I think that they managed the inflation pretty well. But we have to recognize that in the year 2022, it was a period of since the beginning of the first day of that year to the last day of that year, the market moved down. Yeah. But where was Singapore in the year 2022? Yeah. So we have to understand that the year 2022, this is STI. We didn't move much at all. So which is good, which is when the world went down, but Singapore market still the same. But the best part is that for Singapore market, I think most of us recognize that Singapore stocks, not all of them, but a good many handful of them pay very good dividends. Yeah. And if I'm going to include the dividend into, this is called the STI Total Return Index. In fact, Singapore market, if you are going to look at 2012 and onwards, the market actually doing not too bad. This is to include the dividend, this STI index that include dividend called the STI Total Return Index. So this is how I look at STI. And let's say, moving forward, I suspect that the world is going to get a little bit more challenging with trade war, with not just financial trade war, but physical war. And it seems like it's not going to end anytime soon. And the gold also giving me a very strong signal that inflation may not be over yet. Why I say so? Because CPI may have come down to about 2.9%, the latest reading, but the gold has been charging up. And the question is that who is buying gold? And we all knew that the gold over the last 2 years, the central banks around the world are buying gold. And we got to ask ourselves this question, why are they buying gold? So gold is a inflation hedge. Some of you may recognize that. So by looking at the gold price, and I will find that to answer this question, that I have to make this inquiries that why are central banks still buying gold today and holding all this gold position? Are they still seeing that it's an inflation hedge? And I think my answer is yes. So now we are moving forward a very uncertain world, but we also recognize that the money have to go somewhere. That you could see that in 2022 is pouring into Singapore market. And sometimes it may not bounce up quickly because all this hedge fund, what they do, or fund, or whatever fund, the government fund they do, they don't want to frighten the market. They don't want to buy a stocks and buy it one go and cause the price to move up. They will collectively buy. And that's what exactly I'm doing. Every month, every quarter, I have a good cash flow coming in. If I'm a good saver, a good cash flow from my work, from my speaking engagement, from my investment portfolio, I will try to save. And when opportunity come, I will roll in some more. Yeah. So which I just did at the post closing. Now, so which sector you may be interested in? I'm not particularly interested in any sector, but I just want to give you a reference point here. Is that, of course, topic is about AI. And some of you may be interested in technology stocks. But I would say that in a time of uncertainty, still is, yeah, although the market is up. And the Singapore market compared to the US stock market, the technology stock, their dividend payout is about 0.57%, but Singapore is a winner here, about 1.73%, comparing to what they have, the US about 616 stocks, but Singapore, we have about 13 or 14 stocks in this category. But Singapore, the stronghold, most of the makeup is in terms of the STI itself, the stronghold is in the finance market. So now I would prefer financial market, the banking sector in Singapore than the US, because the US has been doing a lot of stress tests over the years. So I also feel a little bit stressed. Why are they doing so many stress tests? But having said that, even going to compare our financial market and theirs, obviously we're just 1/10 of them. We are a very small market, but yet something I like about our financial market is that they pay good dividends, averagely about 5.45%. And that's what I've collected from TradingView itself. Yeah, so they have a feature to do that. So in a time of uncertainty, I would like to accumulate stocks, but make sure when I accumulate stocks means that I do not expect them to move anytime soon or move up anytime soon, but while I'm waiting for it, it must also pay me dividends. So Singapore is not a bad option. Yeah. So now again, I have to be very clear that it's not because I'm a Singaporean, I say that. And maybe I'm a Singaporean, I also look at Singapore market. So I derive more view from that. But as an investor, I try to be very unbiased because money is mine. If I put wrongly, a bigger portion allocate Singapore, if I'm wrong, I'm wrong on this bet, then there goes my portfolio. So when it comes to investment, I'm quite unbiased on that. Yeah. So now Singapore market over the years, as you could see, it is not boring. It's good, high dividend payout, but that was a past. And I believe that moving forward, as the world is getting more uncertain, yeah, that the fund will flow, which is happening right now, but it need a opportunity for it to break above. Now, later I'll explain to you how when we break above. But over the past is that you have to recognize that Singapore is a dividend stocks haven. It means that why the Singapore stock market do not move up. So earlier I just shared with you another slide is the STI total return index. If we include all the dividends, in fact, you could see that our STI stock market is quite a linear upward trend. But if I take that away, this is what we see here is that the Singapore stock market is a range-bound market where you have to, the strategy in the past was that somewhere around 2005, you try to accumulate them. Somewhere around 3004, 3005, you try to let cash out some of them. But in between, you should collect dividend. But moving forward, I think I want to hold on more. Why? Because as the world getting more and more uncertain, I do suspect, and I'm seeing it right now, that the funds are pouring into the Singapore market and the stock market also. Now, so technically, where something that I really enjoy is to study just the price behavior itself. So I have this suspicion that look at STI alone, we could see that over the years since 2008 that we're seeing here, it has been trying to breach this about 3004, 3005, many attempts, but it failed. But you could also see that there's this ascending triangles. It means that if I suspect that if we try hard enough, it may succeed. Now notice that the range is getting tighter and tighter. And I do know that a lot of remisiers are retiring. I just met one of them in one of the community event over the 2 weekend ago. I say, what are you doing? Are you still a stockbroker? No, Singapore stock is so boring. But no. But I found that Singapore stock is consolidating. Yeah, as you could see here. It may be boring to him, but to me it's exciting because when the market consolidate behavior signs in price behavior, well, the more it consolidate, the better chance that if it break for whatever reason, I think the market will start to move up. Okay, now later on, I'm going to share with you one of the element that I'm seeing. I think why I find at the time is quite near. Yeah, I have no explanation for that, but we take cue from different element. It could be a stocks, it could be the currency, it could be the fund flow, different elements. Now let's look at Singapore stock itself. I just want to list down different stocks, which I'm not a stockbroker, so I will avoid recommending any specific stocks. But of course, you can ask me what stock I bought at the market close today. I wouldn't tell what stocks, but I would say that I find that pump oil is very interesting because I look at the commodity itself. I study commodity itself. If I felt that the commodity is about to move, then it will relate to what are the companies that is listed in Singapore, since I'm interested in Singapore market. So which are the company that have a very clear association with palm oil? Because when the palm oil start to move up, then the company should also benefit as well. So this is the clue I'm just given to you, but please don't ask me what specific company is that. So if you're interested in technology stocks, these are the 13 stocks that I list up for you. And you could see that these are the dividend. Some of them don't pay dividend, but some of them do. Do take a close look at some of them. And for those electronic technology stocks, there are 25 of them. You may want to screen capture it. In case you miss the technology stock, I'm just going to freeze the screen for a few seconds. They're going to move on to electronics now. There's 25 of them. Yep, so these are the dividend stocks, or rather the dividend payouts. And then the other 10 of them, yeah, to make up total 25. Okay, so before we go to the Q&A, this is our last slide where I found it's really interesting here is that every week I have this case study I share with the group. And this week on the 20th of August, as you could see here, I find that something is very interesting here in the Singapore stock market, which is, I just look at the price behavior, yeah. So, of course, over the past few weeks or few months, you could see that there's reports that say that there's a lot of this delisting and whether government should support the Singapore stock market or not. So there's some debate here and there. But let me just put that aside because sometimes all these are noise, but I do read them. But most of the time when I make an investment or trading decision, I look at the price behavior because the price speaks the truth. And what I could see here that the discussion here with that group where I share on every Monday is that I could see that the SGX itself, and for the longest time, you could see that it range bound. Yeah. So earlier I did share with you a clue how I read the markets that the longer it range, the tighter range it get, the more excited I come because the time may be near. Then we could see that the SGX from about 960 within a few days, it went up to about 1055. And today, as I last checked, is at 1077. So then I got to ask myself, SGX is a listed company in SGX. Yeah. So yeah. So SGX is a company that listed in Singapore Exchange. Yeah. So now, then what is the business of Singapore Exchange? Yeah, so you think about it. But if the price of Singapore Exchange start to move up, so what is it telling you? What are the investors seeing? Yeah. So I have Singapore stocks for some years by now. So it's not moving. I'm not losing patience at all. I'm still holding that. But now as it start to move, I'm considering that could it be the time as the world getting more and more uncertain that fund flows are into the Singapore market, and could SGX benefit from it? Yeah. So because as there's more transaction that's coming in, ultimately SGX may benefit from it. Yeah, maybe some of them may have some numbers. I do not know, but the price alone is speaking to me that SGX has a very interesting behavior. Moving forward, I have some stocks in SGX, but since I break this 980 resistance, as you could see, I'm quite interested to consider to accumulate more of SGX stock, because when we get into the stock, it's not just we buy and hold them, but we also have to make sure that it start to move. Yeah, so that's more important as well. Okay, so we're going to move into the Q&A. Before that, I just want to share how we can get connected here. That's my YouTube channel. So every Sunday, I will post insight about what happened to the macro market and how would that create certain opportunity or how we can manage the risk. So this Sunday, my topic will be how to recognize a cautious bull. And I would say that the US market is in a very cautious bull right now. And what do I mean by cautious bull and how you can recognize a cautious bull? Yeah, so you can provide QR code, you can scan it and subscribe to it. So coming Sunday at 10 a.m., you'll be alerted. So this is my website, and there's some resources. So you can go to the individual segment and study through the resources that I provided. And lastly, this is my email. Definitely welcome you to spark some ideas, especially on the macro front, and where's the opportunity and where are the risks because of that macro behavior. And my email address is, as you could see there, I stated there. So I'm going to pass this time back to Nixon on the Q&A. Nixon.
Right. Thanks, Kong Hao, for your wonderful sharing. In fact, I think tonight is very interesting and very exciting because the market is moving, though we're still waiting for Singapore to have big move, but I think there's a lot of questions on everybody's mind. So if there's any questions on your mind, those who are here, do take the opportunity to just pop your question into Q&A box and we try to best address them. But allow me to just share my screen first. All right, so this is a feedback form. It's an electronic feedback form. So I really appreciate that for everyone here who is present, if you can just take a screenshot or scan a QR code with your mobile phone. I also put the URL link in the chat box. We will really appreciate you to give us feedback for this session. A couple of reasons. One is, of course, it supports us to keep the session going because it takes resources to get Kong Hao to come in and share with us and for us to host a session on a regular basis. So your feedback is very important for Kong Hao as well as for us to keep sharing and keep this webinar series of webinar going every 3 months. So your feedback is really appreciated. So if you can take some time, just click on the feedback form and give us quick feedback. So while doing that, I would also just move back now to the question part where we can address some of the questions that we have. All right, let me stop share first. All right, there's one question from Jin Zhang. Okay, he's asking whether Kong Hao has any comment on NVIDIA share because the price seems to drop despite the good earning. Kong Hao, are you able to share a little bit on your view on NVIDIA and maybe also on the AI, sector as a whole in the US market, since that's one of the main topic for today, right? We want to know what's the status now for this AI trend. Is this going to continue or is this going to range bound for a while? What's your view?
Okay, maybe what I share is that from the technical perspective first, then I go drill down into the sector as a whole, not just on NVIDIA. But I do see that the July and August sell down as a crack in the whole market that we should be concerned about. And we are still in the recovery phase. And of course, the next question is that where the recovery phase continue to recover and break the July or June, July high, then we're going to watch it very closely because technically it's showing me that this is a retracement for more correction to come, technically. Yeah, it's not just NVIDIA, but NVIDIA, technically, I'm seeing that. So NVIDIA, I think I think there'll be some report coming out soon, this tonight or the next few days, that how's the order book like, where earlier I did mention, if you join me from the first session, which I think the one that posted the question joined, because I saw a name at the beginning part, is that there are two risks that concern me, is that recession. Yeah, because all these tech stocks was driven since the ChatGPT being first make public appearance in the market. It was driven by that, and of course driven to quite high. I wouldn't say it's overvalued, but I think it's of quite a bit of value right now. Uh, Quite overvalued, I would say. The next risk that I'm quite worried is that the recession, because again, I said that earlier that if recession hits, you may not see it the next few weeks, but if recession comes, what does it mean to all these shares? It also means that when you have to understand what is recession. Recession means that the economy slow down and companies will start to order lesser because they don't want to get themselves trapped in ordering too much and cannot sell. So if recession comes, all these order books will start reduce. So you have to think in terms of what will happen to NVIDIA shares. Since it really, the P ratio is about 70%, but P ratio, it doesn't mean much. If the growth for next year is still 70%, that's fine. Yeah. So the recession is important to all this because you project into next year. So is the growth is still going to be that 70% to equate today's 70% P ratio? So do keep a close watch on the recession, where there are some indicator that showing me that the recession is definitely in my checklist because of the unemployment rate in US. The latest number is at 4.3. Do put a note about the schedule of all this unemployment number. All these are important. So on the fundamental front, to me, recession is a big threat for all these tech company. But definitely in years to come, there's still growth because I do believe in AI. It's not done yet. But if you're going to buy big right now, my advice is maybe don't. Yeah. So be measured. Like what I say, if you have 100, maybe just separate them into maybe 5 or 10. Then you wait for a good correction to come before you decide to get in more. Yeah.
Okay. Thanks, Kong Hao. Jim Chang, I hope that answers your question. There's another question that is related to US recession, so I'll just pick that. So the question is from an anonymous. In the event of a US recession, what is the best option to transfer funds to? Maybe what is the safe haven, right? So where should we move our capital to?
I think the whole topic mentioned very clearly that seriously, I'm very interested in the Singapore market, and Singapore, we are brokers of the world, and it may seem boring today to you, but in the world of recession or world uncertainty, it means that it's so uncertain outside. But there's a safe haven here. What I'm trying to say here is that yes, when the world, let's say the world global stock market come down, we may also suffer, but I think in terms of the magnitude on the downside, it's not that bad. So earlier I give some statistic over the past July and August, where Nikkei 225 meltdown was 27%, Nasdaq was 16%, and STI it was 9%. So that's have kind of proven that when the world is in not too orderly, Singapore market will come down as well, but not that bad. But I do suspect that with what we've discussed earlier, the SGX start to move up unexpectedly. I don't think there's any news on that. But they give me a very clear indication that the funds are quite interested in the Singapore stock market, looking at SGX alone itself. It's not just STI. So that could provide some clue. So because over the years, I've been always looking for this timing. So my strategy is always have some money parked in the Singapore stock market, the good ones that I believe that if you break the resistance of using the benchmark at 3,004, if you break, it will literally set a new trend, where of course over the years I've been waiting. It has not happened yet, but it doesn't mean that it will not happen. But if we could see that when the world get more uncertain, Singapore stock market, STI, it move up even more. As you could see earlier, I shared on the macro picture on the STI, is an ascending triangle. Yeah, so do study on that, try to understand how it works, because in terms of behavior for price, it helps me a lot in how I make my decision and the confidence to transfer and put the fund that I have in this part of the world. Yeah.
Right, Kong Nao. I'll pose a question on my own here, because yes, when the US does experience a recession, and all global markets will experience certain degree of drawdown, and yes, I think it's likely that Singapore market would have a lesser degree compared to US. So, if that's the situation, should we actually wait for that to happen and before you go into even the Singapore market, or what's your advice? Should we start going to the SGX Singapore market now, or should we wait for things to unfold and happen and then take the bottom, so to speak?
Yeah, so I think every individual will have our own pockets, how we manage our pockets. But I think if you've been following me over the years, my pockets now is heavy on the gold market. It's not just this year or last year, but since I started with CGSI. So, when maybe about 3 or 4 years ago, when I share about gold, and not many people will understand because gold is boring, it's not moving, and gold is nothing. What can we use in gold? But today, gold is moving up, and the central bank around the world is still buying gold and holding gold. So, again, going back to your question about every individual pocket is different. And what I do is that for US market, for long-term investment, I try to have a bit lesser of it. Looking at especially right now because of the decline in US dollars, so that's quite concerning. So you got to ask yourself why the US dollars is declining. And I think it could be the start of the decline. And then I will accumulate over the years on the Singapore stock market. But again, I say that before the market closed today, or when the market closed at post-closing, I'm glad that some orders are done for Singapore market. And what are the companies that are the timing is there, so I try to put in more today. And it's a palm oil company, which I like it a lot. It pay good dividends. Why? Because how to understand certain markets start to move, you may also consider to read into some commodities market. I'm seeing that the palm oil market, that there's a reason for it to spike up pretty soon. I'm not too sure if I'm right. Then if that to happen, then I narrow down to the Singapore stock market. First of all, I like Singapore stock market because it's a safe haven, and happen that Singapore stock market also have a lot of palm oil listed company, which I like it as well. So I just have to select one or two. And then I just put in my chips today a bit more. So it's in different time, and you try to allocate a bit more and more. And especially over the last 2 weeks, I like a lot is that could the timing be near? Is that I could see that there's a spike in SGX stock itself from 960 to 1080. I think that's very comforting. Then I got to ask myself again, why is SGX stocks moving up? Yeah, in times like this. Yeah. So could it be they are seeing that Singapore stock is about to move? So that could be another point of a brownie points that I want to accumulate more. Because of that, over the last 2 weeks, I observed that Singapore stock market, and also because of the palm oil I'm seeing, then today it kind of give me the kind of a motivation to start accumulating more again. Yeah, so I throw in a bit more, maybe about another 5% more today. Yeah.
Right.
So again, it works differently, and I hope you're catching something. So first of all, in a time of difficulties, I have gold market, yeah, all sorts. And for stock market, I would like to focus more heavy on Asia market today. If you find that the place of comfort and safety to me is Asia, Singapore, definitely. And not just Singapore, but Asia as well. Yes.
Okay, great. There's a couple of questions, so let me just try to pick the ones that are related. So there's one question about palm oil stocks that you mentioned. So the anonymous is saying that palm oil stocks are dragged down by ESG concern. So why are you choosing to invest in palm oil stock? He's asking.
Oh, it is very, very technical. What I saw in the palm oil is that if you look at the palm oil, the price itself is at its breaking point of it seems to me that it's moving up. So I would say that 80% are very technical reason. And the other reason, the fundamental reason is that I used to make this statement, and surprisingly, some of the economists after that, they wrote to me and they meet me up in person that they say, Kon Hao, I really love this view of yours. I never thought of commodity market in the aspects. Now, so I lay out my presentation was I lay out different commodity prices in one presentation on different parts, rice, lean hog, cattle, you name it, soybean, all this and that, yeah. So then we do a study relationship, and I mentioned this statement that gold is the leader of inflation. Gold is a leader of commodities. So as long as gold move up, and I do suspect that the rest of the commodity will start to move up because gold is a US dollars hedge, it's an inflation hedge, which is true. And then hedge what? Inflation. Now, when you talk about inflation, commodity is the inflation element. Yeah. So if I find that gold is still on a high, it also means that the rest of the commodities may take turn. Whatever stories behind it, it will take turn to run. So I would say at this point in time, as gold has remained high, different commodities, I would take a very close look. It could be technical, it could be fundamental, and it could be both. At the moment, I find that the palm oil looks sit well with me. And in this situation, I'm wrong. If I get into this palm oil stock, which I did, at least it still pay me good dividends. So I continue to hold it. So I do have some backup plan in the event that it do not perform at all, means that I'm wrong. It always happen. At least I still collect very good dividend. Yes, I know ESG is concerned. I just have to put it aside because an investor is that I also look at profitability as well in my portfolio. Yeah.
Right, great. Okay, there is still on Singapore market. I think there's two questions on S Street. I think S Street merit actually some discussion because it's always been a big sector in Singapore market. So the question is, do you think the S Streets are good bet when interest rates starts coming down? That's one. The other related question is, of course, there's expectation of a rate cut, coming September. So should we start looking at S-REIT?
You see, the thing about the rate cut is US rate cut, and I think our MAS maintain a very strong, clear signal that at the moment there's no rate cut for us. So I do not know that now, first of all, the rate cut for US is how many times will the rate will be cut? Nobody knows. Yeah, so September, it seems to me that 90% it will be a cut. But how much? Nobody knows. Maybe 25 basis point. But subsequently, will there be rate cut? Nobody knows. Yeah, so it's not clear. But as of now, let's say a 25 basis point cut for US, but that doesn't mean that Singapore MAS will do a rate cut. And yes, you are right. Whoever asked this question, that in a high interest rate environment, it is no good for the REITs. And but this strategy for REITs is this. You have to understand what is REITs. REITs is never a capital gain strategy. Capital gain strategy means that if you happen to buy at the low, say $1, it move up to $2, you make 100%. Yeah, so in a way, you're lucky. Let's say you're lucky. But you have to understand that the design of the REITs is for dividend payout. So you have to recognize that the REITs that you have purchased or about to purchase, where are the historical range? Yeah, because it is never intended for capital gain. Now, the first basis, you have to understand that. Then the second basis is that REITs are for dividend gains. Let's say it pay you 5%. Then you look at the historical, $1 is the low, $2 was the high. And then now it's at $1.20. So it's around the range low, maybe you should consider. And how consistent are they paying this 5% yield on the yearly basis over the historic? So we try not to, I know that the market, the stockbrokers, or even SGX himself, when the REITs is at $2 in the expect, is high, then they start to broadcast that REITs is good. But you understand where are the risks because it's at the range high. So it could drop. You may get 5% yield, but if you buy at 2% when it drop, you also lose out on the capital gain. So REITs, first of all, you have to understand is for dividend payout. And the strategy is that you try to identify where is the range, you buy around the range low, so that in case the market drop, you won't suffer much. Yeah. So your question about, to sum it up, is that the interest rate drop, yes, it is positive for risks, but also study into the historical behavior of the risk. Where is it now? Is it around the range low or around the range high? Yeah, so around the range high, then you got to really carefully study it through the gearing factor, all this and that. Are they into a lot of borrowings? If they are, then you try to avoid it. Just look at other risks.
Right. So basically take a simple look at the stock chart, right?
Yes. Yeah.
Yep. Okay. I'm very mindful of the time. We already passed 8:45, now it's 8:46. Maybe I'll just pick one last question. And for those of you who have some questions that we are not able to address tonight, I think Kong Hao, you can share your contact. I'm sure Kong Hao welcomes you to get in touch with him to ask some more questions. But let's pick the one from Hyang Kim, right? He's asking when you talk about the fund flows, right? Can we tell if the spike in the Singapore stock comes from overseas investors or just local investors?
I believe if you in the SGX, you're able to tell. If you were at SGX, they have all these metrics, but in the individual perspective, because I have to speak on that, because most of us are, I think all the participants are individual perspective, I think will not be able to tell. But do check with your broker, which is CGSI. They may have a team who are able to tell the fund flow, whether if the dealer house team or your reminder able to have a matrix able to share with you, check with them. You just give them a email or ask them if you see any interesting fund flow, or maybe they can provide you a weekly update or monthly update if there's a this one I think they can do. Maybe you can ask your stockbroker to request from SGX if on a weekly or monthly basis there's a fund flow chart from overseas to buy up the Singapore stock market. SGX will know because during COVID years in 2020, I was invited by SGX to share in Hong Kong. Why they invited me? Because Hong Kong brokers in Hong Kong saw that there's overseas fund flows into Singapore stock market. So then they asked SGX, and SGX tasked me if I can speak in Hong Kong at the comfort of my home, because then it was already locked down. Yeah, so I shared the reason why I believe that the fund flows are coming to Singapore for the same reason since 2020, and today I'm still talking about the same thing. Yeah, so do check with your broker, where if a broker do not have, then make your broker work hard for you, because the broker is supposed to serve you, right? Yeah. So ask the broker if they can request SGX a matrix where they can send to their clients how to see the fund flows. They may have. Yeah, I wouldn't say that they will have, but they may have. Yes.
Yeah. There's no harm if you have your dealers or reminders that you are in contact with, just check with them. They may be able to give you that. So with that, I like to just wrap up the session. So allow me to share again my slide. So you can see that this is the Learn from the Pros website. I'm going to share the URL here. The reason for sharing this is because this webinar will be recorded, and the recording will be shared on the website. So you can always come back to the session again by viewing the recording, but do allow us some time to get the recording up. So hopefully by end of next week, we should have the recording up. This for today's recording.